Welcome back. You're watching us here on Bazaar Morning Call on CNBC-TV18, and the company on our show right now is Bazaar Style Retail. Their first quarter operational update was good. 37% revenue growth, 22 new stores added. Same-store sales growth were under pressure because of the shift of Eid in the previous quarter. Shreyans Surana, who's the MD of Bazaar Style Retail, joins in. Shreyans, before we speak about the numbers, etc., I have a grouse to make, not just with you, with all the other retail companies. In the first quarter update, they've given their normalized same-store sales growth had it not been for the shift in Eid. But what's interesting is that none of you guys in the fourth quarter gave us an adjusted same-store sales growth downward when Eid was in that quarter itself, right? So basically what has happened is that the fourth quarter same-store sales growth was upstated because of Eid, and y'all did not downstate it. And the first quarter, y'all give us an update which was lower, but then y'all give us a normalized number as well. So when it suits you, you go ahead and give us a normalized number. But be that as it may, that's not just you, that's the entire sector. 37% growth in the first quarter. What's your target for the entire year, and how has sentiment picked up in the second quarter so far?
So basically, in the fourth quarter, the last year, the Eid was on 11th April, and last year it was on this year it was on 31st March. As a result, when we were delivering the updates about the Q4, we were not able to clarify the amount which should be adjusted. But in the Q1, we have adjusted that 11 to 12 days of Eid sale, and we have given that normalized growth. We have grown at around 37% for this quarter, and if you see for the first half, we have grown at a rate of 45%, with an L12 growth of 8%. We have also given that number. In terms of this year guidance, we have guided for 25% revenue growth, and with an L12 growth of around 7 to 8%.
So, Shreyans, let's talk about the year as a whole, right? Because then there'll be Eid and then there'll be Diwali, and something will fall in Q1 and Q2, and then that's an ongoing debate. But for FY25, you did about 13% same-store sales growth, right?
Correct.
So let's talk about the full year. I mean, can you improve that performance? Can your SSG, grow to maybe 15% or something thereabouts? What's your full year expectation? Revenue, you've told us, but same-store sales?
It's around 7 to 8%.
Oh, that'll be 7 to 8%. Why are you working with a possible decline in same-store sales growth?
It's not a decline. Actually, for the last 3 years, we are growing at a rate of more than, last year it was 13%. Before that, it was around 10%. So we always take a conservative growth guidance for our mature stores, 7 to 8, with intent to grow higher on that term.
Got that. And what kind of store addition are you factoring in? Because, in the previous quarter, you added close to around 21 stores. You have a target of 40 to 50 stores. You've added stores at over 25% CAGR over the last 3 years. What's your target for this year?
Again, between 40 to 50 stores.
40 to 50 stores. And what about the availability of real estate? Because a lot of people are saying that while they're, looking to open stores, availability of locations is a bit of a concern. And that may also lead to increase in the rents that they have to pay. Will that be a problem for you?
So I don't think we are facing right now that is a problem, because most of our stores are opening in tier 2, tier 3, tier 4, where still there are only 2 to 3 organized retail players. And because of our approach of the cluster-based strategy, we are working state by state. We are not going pan-India. Wherever we are going, we are finding good locations over there.
Shreyans, let's also talk margins. For the full year, you were at around 13.5%. For this year, FY26, you've said that margins may improve to 15-16%. What's driving this? Give us some more color on the pulse of the consumer. Is the consumer up trading? I don't know if anyone's even thinking of price hikes at all. Or is it going to be a difference in the mix that will drive it? What makes you confident on margins?
So margin guidance is around 14 to 15% on EBITDA. Not 15 to 16, it's 14 to 15.
No, your target.
15%. You're targeted for FY26.
Yeah, for target for 26, EBITDA is 14 to 15%.
Oh, okay. 14 to 15%.
Because the last time you joined us, you did say that, it'll be 14 to 15% for FY25 and 15 to 16% for FY26. And that's what we remember.
So this year the guidance is around 14 to 15% only. The similar guidance last year. And in terms of pricing, see, we are not increasing anything. Our ASP is around 300 per article. The target is simple, that any customer walks in with 1,000 rupees note, we give him 3.5 articles and a style for a day. So
Nice.
it will be more in volume and assortment is rather than price.
Very clear value proposition, right? Walk in with $1,000, get at least 3.5 articles. You're fully styled from head to toe. Pretty
Yes.
interesting. On volumes itself, then, I mean, again, what would be the increase in volumes that you project? And is it going to be more back-ended when the full-blown festive season comes in? Or, you know, what are you expecting in terms of H1, H2 trends?
So see, in terms of trends that we see, last year also in terms of growth, we have grown at 37%, whereas volume has grown more than 40%. So I think that will be the trend. We will work on more volume and more width in our stores during the festival time. Because higher will be the width in the store, more will be the sales in the festival time.
Could you give us a character of the way revenue will shape up going forward in terms of how much will come from core markets, which account for 85% of your sales, private labels are 45% of your sales, and the men-women split is fairly even, 40% men, 30% women, nearly 30% kids. Will this continue, this mix, or are you expecting any significant change from this?
So right now the mix 86% revenue comes from apparel section, and 87% comes from apparel section, and 13% comes from general merchandise. Out of
Yes.
87, 36 comes from men's, 28 comes from ladies, and around 22 comes from kids. So this is the mix for us.
All right. And net debt, where do you target that to be by the end of this year?
So I think the mix will remain similar only. 87% revenue will be coming from apparel section only, and 13% will be coming from gen section only.
No, I was talking about net debt.
Okay, on the net debt will be on the similar lines that we have posted this year. This year, I think the net debt was around 104 crores, and it will be on the similar lines for this year also.
All right, take that point. Thank you so much for joining in and giving us an outlook on this year, and wish you good luck for this year, be it Eid, Diwali, wedding season, festive season, better monsoons. All of that works well for value retailers. 25% plus growth with 7 to 8% same-store sales growth. 14 to 15% margins is the broad target for Bazaar style retail. Let's